Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your cannabis business podcast. Today, we're going to talk about the weekly deal watch and eventually get into CBD data analytics, what you should measure and what you shouldn't. On the line with us today is Dan Kimmis, our CBD correspondent with Good CBD Products. So last week wasn't the busiest week for completed mergers and acquisition deals in the cannabis industry, but some notable transactions, according to Marijuana Business Daily, is including a well-established multi-state operator and another relatively new but fast-emerging player on the scene. So there were only 5 completed M&A deals last week, bringing the total so far this year to 211. That compares with a total of 166 in similar period last year. But in terms of capital raises, the overall volume for the week was similar to last year at 117 million, compared with 133 million last year. But overall, capital raises this year in 2019 continue to outpace last year with 7.6 billion versus 4.6 billion last year. So the number of raises are lower, but the amount of money seems to be a lot more. And we've seen that in some of the crazy valuations, with Tökr receiving a $1 million investment from Merida Capital Partners, who said that their existing operations across multiple states are going to allow them to integrate with additional partners and quickly scale to more markets nationwide. And then, as we reported previously, Curaleaf's mega deals are signaling a shift in the cannabis M&As, where Curaleaf continued to march its second almost $1 billion acquisition with an $875 million acquisition of Grassroots. We partially reported on that yesterday. And so this is another big deal for them, almost $1 billion. And meanwhile, all of that is kind of happening in the US while the Canadian marketplace is shifting as well. So one of the one of the LPs I visited in Canada to help them automate their pre-roll system was Agrima Botanical. They officially lost their license yesterday in Vancouver. That's the first time because of unauthorized activities. We'll leave it at that. But essentially, they were selling oil too early. They were selling products that they shouldn't have been because of the shift or the separation between flower and other products like concentrates and beverages that aren't available until October 17th of 2019. They were selling those beforehand, got caught. Health Canada said, don't do that. They came back and it was still happening. So that's an indication where, you need to follow the laws, and some of these companies will go bankrupt. They were publicly traded, no longer, and all of those shareholders lost their money.
The nature of a reckoning, right? The things that you find yourself doing to keep your company afloat, to keep growth happening, and the stress and strains of a rapid-paced market, right? And decisions that you make in haste in a weak moment coming back to seriously haunt you, like in this case, that crew had a great opportunity. And yet, in order to keep everything working, again, literally some choices that killed the business.
Yes, there was some interesting things involved. I knew the president and the CEO. I was working with them. I'm not even sure if they knew what was going on. There's rumors that there was people involved on the backside that shouldn't have been. And if you dive into it yourself, you'll see that the rumors is a biker gang up there. And maybe they were doing it, but management said they didn't know about it, but still, you're the fall guy. It's a house of cards. It all fell down, and now there's going to be shareholder lawsuits. And that's just part of the game. So we're also seeing Bank of America downgrading Aurora Cannabis on concerns about a cash burn. There's been a lot of deal makings, and yet not a lot of profit from those deals. And so when you take a look at what people are selling and what differentiates them, there's a lot of competition. A chart of the week from Marijuana Business Daily says that the cultivators think their key differentiator is that they grow the best cannabis. And that's a meme. That's really kind of a joke in the industry, is that I have the best flower. My fire is so much better. And 46% said that's what differentiates them. So they have a commodity and they think that their commodity is better than other people's commodities. And I think that's the first step towards the collapse in the entire market, when you think you have the best thing, when the reality is that people are probably going to notice a difference that you have a particular proprietary method or strain. You're really not differentiating yourself, and almost half the market thinks they are.
So I've been doing some field research, right? And having something unique when what you're dealing with, again, is a plant. My gosh, that is again, it's a sticky wicket.
So there's a lot of things to look at. There's some distractions, some FOMO. And so understanding really what's on the bottom line and what you should be paying attention to is important. And so whether it's cannabis or hemp, ultimately it's up to the investor to understand the marketplace. So there's an interesting report from Direct Cannabis Network on CBD data analytics, diving into what you should and should not be measuring. So in the CBD industry, you have some unique challenges. Traditional online paid advertising is off limits. Even paid advertising through Facebook and Google is not really that available for even hemp companies right now. You've mentioned in previous podcasts about CBD companies even having their bank account shut down. And so there are some helpful strategies to at least generate some data when you have none. And that makes it kind of hard to look at some metrics. So number one, according to Direct Cannabis Network on what to measure in terms of CBD analytics, is to turn off the faucet. So they say occasionally you should stop spending money on a particular form of advertising. They ask, do you have a discount code for new customers? Do you spend money on influencers? Do you write blog articles? So once in a while, even when business is going well, you should turn off your spending. So the easiest way to see if the strategy has any impact on your business is to stop doing it. And a lot of people are spending tons of money, like $10,000 on billboards, and maybe it's working, maybe it's not. So it might be easy to stop spending the money and see if you still have some of that repeat business from the earlier spending on that advertising. Number two is to avoid vanity metrics. So the article kind of goes into the customer acquisition cost and looking at some of those metrics, for your social media accounts. Some other ones that I've seen that really don't matter is a leverage buyout. So during the M&A process, people are really looking at EBITDA, that's earnings before interest, taxes, depreciation, and amortization. If there's public comps to look at, that's good, an acquisition cost or transaction analysis. But avoid, just getting data just because. There's a lot of vanity metrics that are not really worth looking at. And so finding an analyst or getting data from some of these aggregators online, just make sure that good data in is good data out. Otherwise, you're wasting your time.
A lot of these aggregators are literally picking up buzzwords, right? And again, you're a busy professional. Ultimately, having curated content, choosing what to consume is part of being an efficient business operator. And so again, find those trusted sources, right?
And the final piece of advice for CBD data analytics and what you should measure and what you should not is to include all of your costs when you're calculating your customer acquisition costs. So when you're on your own and hustling by yourself, it's easy to forget the time value. So as you grow and build your team, you have to include these costs in calculating your customer acquisition cost. Your time has value. Even when you pay for ads or influencers, you have to include the management time as an expense. The article goes on to say that writing a consistent and thoughtful blog isn't free, even if it's just you writing the articles. So sales strategies often become more expensive over time as you have to introduce multiple layers of management to execute all strategies harmoniously.
So the road tour is starting to make some noise, right? And I had a CMO or chief marketing officer from one of the big traded pot stocks at this point, I guess you would say, checking in and asking about the road tour and how we do it and all of this. And I was explaining that it was basically, that it's your wallet and my wallet, right? And she was stunned, dude. She was like, well, but that's got to be a significant expenditure. And you know the numbers, I know the numbers. Yes, it is. It's expensive to get good data. It's expensive to to go get a customer. To actually get a customer takes a lot of bread, and there's a lot of hidden costs critical to understanding the actual value you are collecting in your business.
So we'll dive into a couple of charts here that talk about CBD beverages as a small yet growing portion of edibles. By 2022, BDS Analytics projects that edibles will reach $3.4 billion. beverages will be 374 million. And no doubt CBD is going to play a huge part of that as Constellation Brands comes in with Corona, as well as Coca-Cola and whoever else. So in the US, the non-psychoactive hemp and CBD product purchasing largely falls into ingestibles or topicals. So edibles are about 53% in the US, topicals are 24%, inhalables are 11%. And in China, where we used to get a lot of our hemp in 2017, consumer sales in US millions is about 823 million for textiles. And then hemp-derived CBD is a really small portion at 53 million. And then food supplements and personal care at 201 million. And so there's a lot of exports back into China that used to be a huge exporter. And then we're looking at low-dose edibles as becoming the new thing. We've called isolate in the past on this podcast hot dog water. And so looking at full plant extracts is going to be the future of what people should be looking at, should be analyzing, should be purchasing as the price of the kilos and liters of CBD isolate drops from about 5,000 to 3,500 as more people come online. And looking at the number of edibles and people that prefer low dose is only a third of the market. I expect that to increase. So looking at micro doses increasing at 108%. And so definitely going to be more popular. We're looking at 40% of consumers choose those products based on CBD content alone, and 27% prefer at least a 10-to-1 or higher.
Did you see the Bartell's billboard there on the Ballard Bridge?
So Bartell's is a local CVS equivalent, and they've got billboards on the side of the road that say full plant isolate, I believe. I'm not even sure how.
What it says is CBD ? And then something about full plant extract, better than CBD, full plant extract. Again, the Bartell's logo, and it's just interesting. So as a researcher in support of the Talking Hedge, your cannabis industry podcast, one of the things that's been really fun is to go out and sample knowledge, right? Okay, you sell it. Can you tell me what to do with it? We're talking about things like small advertisers getting booted and having their accounts turned off, and then the mystery of large crew not ever having their credit card messed with, being able to mount billboards all over the city, all of this stuff. Business is cutthroat, right? Business is business. And, it's interesting to watch, and it's absolutely gut-wrenching to watch from the sense of watching sharp dreamers get eaten alive by this market. So this is, again, find your trusted sources.
Which comes from the Talking Hedge. And with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.